With YouTube Premium,
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Y'all give me 1 second. Okay, we here. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Leroy Sr., a.k.a. Aranya Grande. That's your big spot if you know hablo español. And you're tuned to another episode of the Intraday Price Action Recap. Now, This episode of the Intraday Price Action Recap being brought to you by the Smart Money Manuscript. What is the Smart Money Manuscript? If you happen to miss that beautiful intro, the Smart Money Manuscript is just a course that I put together myself. A lot of blood, sweat, and tears, hard work I put into it. Took thousands, hundreds of hours of videos and all that stuff like there, and I put it into one course. Nice bite-sized chunks that you can digest and get a good understanding of all things stock market. Right? But it doesn't stop there, right? And it's just the low cost of $69.99, $69.99. That is not $6,999, $69.99. First link in the description below will get you that. But not only do you get all of that good information and nice digestible chunks, you get access to moi every second Saturday at 11 a.m. Eastern Standard Time, and for just your whatever questions you might have pertaining to the course every second Saturday. So for those who like to try to pay for one-on-ones, those who want mentorship, those who just want to pick the brain of the creator of the course that you paid $10,000, $15,000 for, you get it all for $69.99. First link in the description below. Speaking of a link, and there's a link pinned to the top of the chat. I don't know where your chat is on your device. On mine, it's right here, right? It's right. Welcome, Ice D. I have never seen that name before. What's up, Ice D? If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in, I jalapies. I just ain't never seen that name before. Here to learn and share, ain't never seen that name before. She's always here. She's like that one student in class that sits there very quiet, brings the teacher apples and stuff. Little quirky, scares the teacher sometimes, but I love her because she's like one of my favorite students. You know what I'm saying? A little off, just quiet and weird. Bring the apples, you know what I'm saying? Always reading the Bible, saying praise the Lord every time somebody walked past her desk. That's her. But she's never seen your name before. And I ain't never seen it either. So welcome. All right. Hey, hey, there's a link pinned on my chat. My chat is right here on YouTube, right? My chat is right here. Abdullah Amblangata. Now, somebody joined the gang, and they said, I am Abdullah Amblangata. If you come on here crank yanking, I know something. I know if you come on here crank yanking, he said, my name is Abdullah Amblangata, right? If somebody start crank yanking, we know who it is. Hey, if Price did something today that caught you off guard, right? There's a link in the description, pinned to the top of the chat. Click on that link, right? It'll bring you into the Zoom. Now, I have a wait room set up because we had an issue when I was sharing the link publicly and somebody was coming on to the thing crank yanking, right? I don't know how they was doing it, but they was popping in with about 4, 5, 6 different names, and it was the same video player. Very pornographic video, very revealing pornographic video, might I add, right? So when you come into the Zoom, I have to let you in. Now, if you come in with some weird name I've never seen before, I will not let you in, right? So if you're trying to get in and I don't know the name and I won't let you in, just type something in the chat. Say, Tim, I'm a real person. I'm not going to be crank yanking. Type that in the chat and then I'll let you in. Now, if I know your name, I just let you right on in. But if I don't know your name, just say, hey, Tim, I'm trying to get in. I'm not going to be crank yanking. And then I'll let you in if you want to ask a question. If you want to unmute and ask a question. If Price did something today that caught you off guard, if Price did something very unexpected, then pull up, unmute, and we'll walk through price. We'll walk through it together and say, hey, we just figure this thing out. We'll figure it out together. And if that doesn't work, call back. Who we got in here? Oh, we got light-skinned Deborah in the building. What's going on, light-skinned Deborah? We got Yolanda. What's going on, Yolanda? We got Abdul up in here. What's going on, Abdul? We got Kim holding down the #1 top fan on YouTube. Shout out, Kim. Here to learn and share. Wait a minute. Yeah, it was here to learn and share. Then it was Ice D, right? And then it was Kim. I don't know how the top fan thing works. I see Kim as #1 and #2. I see here to learn and share as #2 and #3. I see it's all over the place. But I see Rhonda Green. When I tell y'all, Rhonda has the most well put together. I'm the smartest person in the world notes. Rhonda shared some notes with the gang. I did. What was I doing? What was that I was doing? Was it a chart prep?
Yeah, chart prep.
I was doing chart prep. Thank you, light-skinned Deborah. Right? Tell that grandbaby, Uncle Tim said what's happening. I forgot this. I got to send my little nephew Instagram. I hope I don't hang up on y'all. I got to send something. Let me see here. Let me find it. Y'all bear with me. All right. Okay. I found it. Right. Show this to my nephew and tell him Uncle Tim said you're welcome. All right. Oh, I got to put my dog in there. Show this to Sherwin and my nephew. Tell oh no, I can't. I said Uncle Tim, so show this to my nephew. Cut and Sherwin 2. Yes, that's it. Sherwin 2. Wait. I got this short. It's Honey here. It's Honey in here. Honey. Yes. Show this to my nephew. Show this to my nephew. And tell him Uncle Tim said you're welcome. Okay. Oh, this my kid kind of carrying on. Yeah, hear me. Oh, I have paused. Hopefully that's still working. All right, we got Rhonda Green, the note taking. Yeah, Rhonda shared some notes. Them notes were so beautiful. Rhonda had screenshots all up in her notes. She had bullet points. She had all kind of, man, them notes were so beautiful. I was like, man. We got FC up here. What's up, Felicia? I ain't seen Felicia in a month of Sundays. No, I seen Felicia the other day. I'm lying. I saw Felicia the other day. We got Venus up in here. What's going on, Venus? Did I say honey? Honey? Did I say what's up to honey? I don't know. I can't remember. Anyway, Yes, really. Really, you said you like that? You like that, Tish? Am I kind of carrying on right now? Am I kind of carrying on? Hold on, let me see if I can. Let me see if I can show you. I can't. They go. Let me see if I can show y'all. I know Josh. I know Josh gonna love it. I know. Let me see if I can. Can y'all hold up? Let me see if y'all can. Yeah, y'all can see. Y'all probably can see my screen right there. Let me see if y'all can see my screen. Yeah, y'all can see my screen. Let me darken it down, so. They wet, wet and long. That thing wet and long. Okay, man. Y'all ain't that thing was wet and long. Y'all ain't tuned in for this kind of carry it on, man. What's up, Aldo the Giant? What's up? What's going on? Hey, uh, let's get to it, man. I think I done said everything I need to say. Let me share my screen and we gonna get to it. We got uh I don't know. Today was Monday. Yes, today was Monday, the 29th of September. September. We talked about during the chart prep, I believe. We said that so far, September is looking like we're not going to have a typical September, right? I'm good, brother. I missed. Finally, I found you. What did you miss? And I'm glad you finally found me, right? We went to stockcharts.com, right? Why did we go to stockcharts.com? Back in August, we started talking about seasonality, right? Because we know we talk about how time and price is fractal, right? And we know tick. What does tick stand for, gang gang? What does tick stand for? Those who was on the stream this morning, share with us what tick stands for.
Time is king.
Time is king. Thank you. Thank you. Time is king, right? So, stockcharts.com, for those who don't know, right? If you go to stockcharts.com and you click on the little drop box right here next to where it says enter symbol, right? If you go here to the little snowflake, it says seasonality. And then you could type in, right, the instrument that you want and see right, say seasonality of, right? It's telling us, oh, they got a new thing where you can compare the two now. I ain't even know they was doing that. Now it's showing us the seasonality of QQQ, right? Because we have went to QQQ, right? And we're looking at the seasonality of QQC, seasonality of QQQ, right? And over the last 5 years, right, September has a 40% chance of closing higher than it opened, right? That's what this number up here means, right? Percentage of months in which QQQ closed higher than it opened from 2021 to 2025, right? So 40% of the time September has closed positive in September from 2021 up until now, which would be 2024, because this month ain't over yet, right? For this year. If you stretch it out 10 years deep, 40% chance. Stretch it out 15 years deep, 40% chance. Stretch it out 20 years, as far as you can go. Over 20 years, it's a 50% chance that September is going to close, right, higher than it opened, right? And then anything lower than that, 10 years, 15 years, 10 years, 5 years, it's a 40% chance that it's going to close higher than it opened. Now, this is where we get into it's not being your typical, right? Right now, we're on that lower chance. We're on that 40% this year. This year is that low, is that 40%, because we're about to close higher than we open, unless tomorrow is just a black swan event that takes the market to Hades. Then QQQ is going to close positive, right? So right now we're in that 40%. And the reason why I say it's not typical is because if you look at the average percentage, right, that's what this bottom number is. That's the average percentage, right? So the average percentage over the last 5 from 2021 up until now is negative, almost negative 3%, negative 2.75%. Over 10 years, negative 1.75%. Over 15 years, because I'm looking at the right one. Yes, I am. Over 15 years, negative, a little over negative 1%, just say negative 1.25. Then over the full 20 years, slightly negative, pretty much flat, like less than 0.5% negative, right? So over 20 years, September is typically slightly negative. Over the last 15 years, it's negative a good amount, over 1%. That's a pretty good amount, right? Over the last 10 years, it's negative almost 2%. And over the last 5 years is down on average negative 3%, right? And when you look at it year over year, right? We looked at it year over year. If you can go in and look at it 1 year at a time, right? And we went through and we looked at almost every year. And then I think last year, like back in 2006, it was pretty positive, right? And 2007, it was really positive, right? Then 2008, during the financial stuff, I think that was the financial. I think 2000, either 2008 was either the housing or the financial. I can't remember which one, right? It was bad, right? 2000, it was down 16% almost, right? Then 2009, it was up pretty high, right? And then 2010, it was up really high, right? And then 2011, down really bad, right? 2012, pretty much flat, right? 2013, up pretty good, right? Going through year by year. Now, let's jump to more recent times, right? 2020, right? Down really bad. Okay. 2021, down really bad, like almost 6% each year. 2022, down almost like 10.5%. 2023, down over 5%. And then last year, it was up 2.6%, right? So over more recent history, it's been very bearish, right? Long time ago, it was like, pretty positive. It was either very positive or very bearish a long time ago. And more recent history, it's been very bearish, except for last year, right? So now we're not going to get that very bearishness that we've been used to over recent history, right? Over recent history, we're not getting that like uber bearishness that we're getting out of the cues right now. Why were we even looking at the seasonality of the cues? Because time, you look at time first. So coming into August, right? Seasonality, August is like basically flat to negative, right? On average over recent history, right? Around 1% positive or 1% positive or negative has been the norm, right? That's what we looked at from our research, just like we did for September, right? And then if we look at, and while we look at the Qs, because that's the NASDAQ, and we trade the NASDAQ futures. So we're looking at that. So for August, right, we ended up with a 1% month, right? You see, from when July closed to when August closed, it was positive 0.95%, right? 1% month, right? Now, from where August closed to where September is right now, we're sitting at almost 5%, right? That's outside of the norm of recent history, right? We're up almost 5%, and we have one more trading day left in this month, right? Now, personally, I contribute that to the fact that we're trading at all-time highs. And whenever we trade at all-time highs, right, we already know that we're not supposed to try to pick a top, right? Because when we're trading at all-time highs, people are going to be trying to short the top, and old Phil going to be in there hitting that button and continue to squeeze the shorts. You know, you hear people talk about a short squeeze, right? Phil going to keep hitting that button, squeezing the shorts, squeezing the shorts, squeezing the shorts, because everybody want to be the GOAT to say, hey, I shorted the top, right? And what better time to squeeze them is during a time when the market is supposed to be going into a bearish seasonality. All right. So as we went into August, we said, hey, this is what we would like to see. We would like to see us take out this buy side and start this bearish move. We took out the buy side, started a bearish move on the intraday, but we never got that bearish breaking market structure on the daily time frame or higher, right? Moving into September, right? We said we want to see if this bearish intraday stay intact, right? Because we still had bearish intraday price inside of August, right? After taking out that July high, we took out the July high, as you see, right? We started trading down, came all the way down and traded into overlap with the, did we overlap that? I think we did overlap. I think we overlapped that that June. Yes, we overlapped that June candle, right? Not making an opportunity, not giving it an opportunity to create that BISI that should have formed out of the close on July, right? And then we traded all the way back up here, right? And closed off of the high of July. So then going into September, we said we want to see if this high stays in place and we continue this bearishness, right? And get a higher time frame, either daily or weekly bearish breaking market structure to start the bearish seasonality. Whole time we were like, we're still in the buy program, so we're not picking the top. We're just watching our intraday price action to see if we get that bearish breaking market structure on the daily or weekly or higher. We never got it, and we continue up, right? Once we start to continue up, nothing could stop me. We all the way up, right? That's why you never try to pick the top. And right, that's why we was looking at the seasonality, because the time of the year when this instrument historically shifts into a bearish narrative, right? That was the time of the year. So time had come into place. So that's why we was looking to see if we got a bearish shift, and we never did on the higher time frame. Never got a bearish shift. Every time we started to come down, right? Old Phil hit, push the button, push the button. Old Phil would push the button and push it higher. Okay. So now September is getting ready to close. And unless tomorrow brings a black swan event and we drop off, right, over 5% in one day on the Qs, we will not close flat for the 20-year history, right? The 20-year history on average is closing flat. The short-term history of closing, you know what I'm saying, down pretty much, right? Let's just say 1% down. The short-term history of closing 1% down would require us to sell off over 5-6%. To close negative would require us to sell off over 6%, like 7%, right? So unless we get a black swan event tomorrow or the price just die, right, we're not going to get a September that falls within the majority of what typically happens in September in our short-term history. All right. Now that that's out of the way, right, let us go back to the NQ. Right. Looking at our daily chart, since this is the start of a new week, right? Since this is the start of a new week, right? We will look at, let me take off this calendar that just started. All right, this is today. All right. So last week, right? Last week, this was the highest high. This was the lowest low, right? When I opened a new week on NQ, my baby.
Sing it in Vogue.
When we opened this new week, we didn't have a gap. We opened up in the exact same place where we closed on Friday, right? So that's what that purple line is right there. That's our new week open. When we opened the new week, we opened right there, as you can see, right in the middle of last week's dealing range. If we get a Fibonacci tool and run it from the highest high and take it down to the lowest low, as you can see right there, we opened up right there, smack dab in the middle. Just like last week, we closed right there, smack dab in the middle. So it doesn't surprise me that it opened up in the exact same spot. Why is that? Because for the dealing range, because y'all know the algorithm gives you prefabricated dealing ranges. Y'all ever been riding down the street and y'all just saw this big truck with a trailer on the back, low boy probably trailer, and they got a whole house sitting on the back of it? That's a prefab home. It's already made. They just go sit on a lot. You know what I'm saying? Tie it all in. Boom, you got your house, right? So it gives you a prefabricated dealing range. And from the highest high to the lowest low of that dealing range, 50% is fair value, right? So since we closed right at fair value of this dealing range, it doesn't surprise me that we opened up right at the same price, because the algorithm sees this as, hey, this is fair value, right? So that doesn't shock me, right? Now, when we're looking at where we are in the sense of price, right? If we look at our daily chart, we are clearly in a buy program, right? Clearly in a buy program. We've come up, made all-time highs, and retraced back, right? We talked about this last week. This retracement back came down into some discount PD arrays that we were watching, right? Because we said, remember, we said the higher time frame was in a buy program, and we had went into a intraday sell program, right? We was in a sell program, bearish dealing range on the intraday time frames. So that intraday time frame had come down into some discount PD arrays that we were watching. All right. It came down into this discount bullish fair value gap. But Tim, if we're all the way up here, how are you saying this is a discount? Because we talked about this also. If you look at all of this price action right here, right here, when we traded up and made a new all-time highs, all of this price action here is very efficiently delivered, right? So when you get very efficiently delivered, a very efficiently delivered price range, meaning it offered buy side delivery and sell side delivery, it can just be 2 candles, right? Or it can be a whole bunch of candles. But as long as you trade buy side and sell side delivery in that same price range, it's now an efficiently delivered area. And then this is where the magic happens. When you leave that area like that, that efficiently delivered area now becomes a balanced price range. No matter if it's 2 candles or a bunch of candles. But Tim, that doesn't even make sense. You don't even know what you're talking about. I don't. You see this large red candle here and this large green candle there. What is that? That's 2 candles, right? We left that area. Once we left that area, what did the algorithm do with these 2 candles right there? It used it as support. Oh my goodness! He's telling the truth! It really works! Yes, it does. All right. So we have a balanced price range here now. So what do you anticipate with a balanced price range? You anticipate it. Look here. See, Walt, the next time you show up to class this late, I am not letting you in. You will stand in the hallway until the end of class.
What's going on, Tim?
What's that? So we're not looking from here up to there for price to come back to a discount anymore, right? We're looking, right, at the most from when we leave this area, right? So that's at the most. So here's our order block there from when we left that area there, right? Because we traded outside there. So at the most, we're coming from this order block when we left out of there, right? At the most of a range that you're going to be watching for price to come back down into a discount. Okay. Now, in the sense of this area here, right? We left that area there from our order block. We came up, we came back to a discount, right? So now here, right, at this point, right, we can watch from here for price to come to a discount. At that point right there, we can watch for price to come to a discount. So no matter if you're watching from here to there, or if we're watching from when price started, right, now you're looking for price to come back to a discount and give us a reason to buy. Right now, why would you want to include this low as your lowest point of range instead of that low, right? Because you want to include this low because that gives us, right, on the daily time frame, an opportunity to sweep sell side liquidity, right, and still be in line with the higher time frame bullishness, because on the weekly chart, the weekly, I don't have that. I guess I don't have that. I guess I don't have that. I thought I had that marked up. I guess I don't. Anyway, I'll mark it out now. The weekly time frame has a reason to come down there. Right? We talked about it, but I guess I never marked it. Right? The weekly time frame, right, has a reason to come down here, right there. All right. For our weekly range, like our weekly dealing range. If we take our Fibonacci tool there, right, we got a fair value gap from the lowest low to the highest high. That's right at equilibrium. And when we look at our balanced price range and we go from when we left that area, we got a discount PDU rate on the weekly where we can draw back down to it and continue higher, right? So on the daily time frame, right, we see that on the daily time frame, this weekly PD array that's resting down there, if we come down and take out this sell side liquidity, we will be touching our weekly PD array that's designed to take us back up, right? So on a daily time frame, that's why I would include that low there instead of that low, right? Because I'm including this internal liquidity. So when price is coming back down, I'm giving it an opportunity to take out internal, manipulate internal sell side liquidity before going back up. Okay. Everybody on track. Now we have our retracement back down into a discount. There's our discount, and we hit our discount daily PD array, right? And we wick back up off of it and respect the other daily bullish PD array. Yes, this one isn't a premium, but we respect consequent encroachment of it, right? We bounce off the discount and we respect the other bullish PD array. Okay. Then on Friday, right, we trade down respecting the discount wick of Thursday, right? And we don't take out the high. We got an inside day on Friday. We talked about that. We anticipated Friday being an inside day, and we looked at all of our PD arrays that was designed to support or resist price, and all of it delivered beautifully on Friday. Now, coming into today's price action, right? We're still in a buy program on the higher time frame, right? The intraday trading has created a bearish dealing range or a sell program on the intraday basis, right? So the intraday is opposite of the daily and higher, right? So we say when the intraday is opposite of the daily and higher, this is not high probability conditions, right? High probability conditions is when your intraday time frame is in alignment with your daily and higher time frame, right? That's when you're going to get your high probability trades, right? Now, when the intraday time is opposite of the daily, right, then you have to be careful. Jack be nimble, Jack be quick, right? You want to be in and out when you're trading because it's not very high probability, right? You can get choppity chop chopped to choppity chopped up. Okay. Let me go back to the weekly and I'm gonna save this real quick. I just want to show this on the weekly time frame. I'm gonna put this down here, and that's gonna be for the 8th. Bullish fair value gap. That's gonna be for the 8th. All right. Okay. Now that we got all that established, we got everything established, what we anticipate price to go, what price has done. Now let's look at the date, right? So we come into the week, we don't have a gap open. We're at fair value. That doesn't surprise us. As we open up, right, overnight price, let's go to intraday time frames. Let's go down to 60-minute first, right? Right. So looking at a 60-minute chart, right? Looking at a 60-minute chart, this right here, boop, is the candle when we open up. Right. This is where we open up right there at 6 o'clock p.m. Okay. This is our weekly dealing range. As we can see, it's a bearish dealing range, right? We made the high first. How do you know that? The high is furthest to the left when you look at where the high is and where the low is, right? We made the high first, and then we made the low of the week, right? So it's a bearish dealing range, right? We took out buy side liquidity, then we came down and took out sell side liquidity, right? Again, a bearish dealing range. When you take out liquidity on both ends, that gives you a dealing range, right? In this case, you took out buy side first, then sell side. That's a bearish dealing range. When we open up here, we already said we was at equilibrium. At equilibrium or fair value, the price can go either way. It can go up or it can go down because there's a 50-50 chance of it going in one of the directions. Okay. So we open up and we immediately start trading up, right? So from the open of the day, right, price starts to go up. So if we open at fair value and start to go up, right, where is price? Right? Where is price now? Is it in a premium or is it in a discount? Somebody tell me.
Premium.
We're in a premium, right? Price is in a premium. Now, the overall daily time frame and higher is bullish, right? If you're in a premium of your dealing range and the price action is bullish, are we looking for a chance to buy at that moment? Right? We're in a premium. We're in a buy program, right? Are we looking for a chance to buy?
No, just sell.
No. I see no, and then Seawalk said, nah. Right? So we're not looking for a chance to buy because we're in a premium, right? But Tim, price has just been going up. We've been in the premium for a very long time, and I want to participate. I'm glad you said that, little Timmy Rogers. This is when you wait for the algorithm to establish a dealing range that you can buy in the discount of, right? This is when you want to go into your lower time frames, right? And then use a intraday time frame as your higher time frame to get a dealing range that you can trade within, right? You're going to trade intraday and look for your buying opportunities, right? Because the overall time frame is bullish, right? And so if you want to trade with the overall time frame, you want to go to your intraday time frames and look for buying opportunities in the discount of established dealing ranges on the intraday time frame, right? Well, Tim, how can I do that? Right? If we go back to our daily time frame, right? If we go back to our daily time frame and we look at our daily time frame, right? Does anything about this here, all of this price action here, and then this move up like that right there, right? Does anything about that? Not just, we're not even thinking about that. Let's do this for a second. Let's take this off. Boop, just like that, right? And we look at this daily time frame, right? Now, looking at this daily time frame here, does anything about the way price is trading right here, and then this little move, that right there, does any of that, let's just take a picture of this in your mind, right? Take a picture of, matter of fact, we're not even going to take a picture in our mind. We're going to take a screenshot of that, right? Then we're going to put the meat back on the bone, right? We're going to put the meat back on the bone. We're going to chop off this day again, right? Then we're going to go back to that 60-minute chart, right? Then we're going to do like this right here. And then we're going to take the meat off the bone here. We're just going to come here. Let's pick a few candles like that right there. All right. So if I take this and put it here, move this over here. All right. If I take this and put it there like that, and then I find a little picture that I took, right? And I open up that little picture that I took right there, right? Is there anything? Make sure I'm not blocking it. I'm blocking it. No, I'm not blocking it, right? Is there anything? Okay, where's my little Zoom thing? I'm supposed to have a little Zoom thing where I can pick. Okay, there it is. All right. Is there anything about this little area with that move that looks familiar? Right? Is it this little consolidation area that didn't that move up? And this little consolidation area here in that move up, does anything about that look familiar to anybody? I don't know. It might just be me. It might just be me. Right? So, okay, with that being said, right? So you let the algorithm, right, establish a range that you can find a new discount off of, right? And so we see here on the intraday time frame that we got a very efficiently delivered area of price right here, right? And then we open up this day right there, right? And as we open up the day, we immediately start to trade away from this efficiently delivered area of price. Now, since we're leaving this efficiently delivered area of price, what do we say about that on the daily time frame? When you leave an area that has been efficiently delivered on the daily time frame, what did we say it became again when we left it? Yes, a BPR, right? And since time and price is fractal, now that I'm on an intraday time frame and I have an efficiently delivered area of price and then I leave it, that must mean that this is now a balanced price range right there, right? So now that must mean on my intraday time frames, all I need to be looking for is this area up to whatever high I'm making, right? And look for an opportunity for it to come back down to some level of support, right? Now, back to what we was talking about last week, right? Got a lot of junk on my screen. Get out of here, brushes. You're in my way, right? Don't need you, Fibonacci tool. You're in my way. Okay. Now, if we look at right here, this is where we start the day. Okay. We already established all of this down here was our balanced price range. Let's go back down for those who can't see it. right? We're going to do this right here. Draw a box around this right here and squabble, 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 scribble, scrabble, scribble, scrabble, scribble, scrabble. Then we're going to go back to the daily chart. All right. Now, you see it? Do you see it yet? Do you see it yet? Ooh, my secret. That's our balanced price range right there. All right. So now, since that's a balanced price range, okay, when we look to the left, 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 right? We're looking for PD arrays, right, that we anticipate to use for support or resistance, right? And when we look to the left, right, there's a myriad of stuff over here that we can look for, right? When we were doing our chart prep, I think it was the chart prep, might have been the live stream, the tape reading session. Can't remember, my days run together. But if we look over here, we see two implied fair value gaps, right? And those two implied fair value gaps, they create a balanced price range, right? And if you don't know what an implied fair value gap is, well, first of all, is there anybody who don't know what an implied fair value gap is? If you don't know what implied fair value gap is, I'll take the time to explain it. So if you don't, put a 1 in the chat, or if you're in Discord, say, I don't know what it is. I mean, in Zoom, say, I don't know what it is while I sip on some water. And by the time I finish sipping, if I don't see anything or hear anything, we're just moving on fastly. All right. Okay. Valentine said, I don't know. Okay. I was about to move on. All right. So an implied fair value gap. We know that a fair value gap is a 3-candle pattern where candle 1 and candle 3 don't share price because candle 2 was a large expansion candle. And the highest high of candle 1 in the case of bullish and lowest low in candle 3 in case of bullish don't overlap. But an implied fair value gap is when candle 1 has a very long wick that goes up a large portion of candle 2's body, and candle 3 has a very long wick that covers a large portion of candles 2 body, so they overlap. What you do is you take a Fibonacci tool, right, and you run it from the high of candle 1 down to the close, and then the low of candle 3 up to the close, and the space in between the consequent encroachments of those Fibonacci tools, that's your implied fair value gap for candle 2. Because if this long wick didn't exist and this long wick didn't exist, there would be an imbalance inside there. So this is your implied fair value gap off of that expansion. Okay, that's an implied fair value gap. And now we have that here because of this large expansion up and this large expansion down, right? So with this large expansion down, right, we have an implied fair value gap on this side, right? And we're going to change the color of this so that we can see it more clearly. And we're going to make it a little thicker. A little thicker. Y'all ever see the video with the one white lady, and she was like, "Yeah, my butt might be flat, but my heart is thick. It's thick. My personality." And so she said, "It's thick." All right, so that's our implied bearish fair value gap over there, right?
Sorry, Tim, is that the space, if you show the implied fair value gap, is that the space between the two CEs? Like, being able to shade it, or which area? The whole...
No, in between the consequent encroachments. Just like
in between. Okay, thank you.
From consequent encroachment to consequent encroachment, that's your implied fair value gap, right? Bar. Right. So hopefully right. Hopefully the green lines help you see it a little better. Take off that and take off that. Right. So where we see the right in between the red lines, right? That's the implied bearish fair value gap in between those two red lines. And then in between the two green lines, that's the implied bullish fair value gap. Right.
Okay, I see it much better. Thank you.
And then and of course where the two overlap, right? Where the two overlap, whenever you got two imbalances that overlap, right? So the high of the bullish one is here, right? It's lower than the high of the bearish one. The low of the bearish one is here. It's higher than the low of the bullish one. So this area right here, that there would be your balanced price range where the two imbalances overlap, right? So if you had a SIBI here and a BISI there, right, you would have that balanced price range in the middle, right? But we're just looking at the implied fair value gaps there, right? So we have implied fair value gaps there, right? And then not only do we have implied fair value gaps there looking to the left, now that we explain what the implied fair value gaps are, right? What else do we have looking to the left? Because remember, we opened up and start to trade up, right? So looking to the left, right, we have a premium wick there, right? As we prices here, we're trading up. We got a premium wick there, right? We're looking for it to act as resistance or support, preferably support because we're bullish on the day, but since we're on a daily time frame and higher, but since we're in a sell program, we're waiting to see if it acts bearishly, acts as resistance, right? So we got a premium wick there, 925, right up. Y'all probably can't see that. I'm gonna have to darken all this back down again like I did earlier today. I'm sorry, y'all, bear with me, because I don't like a lot of stuff to be on my charts. So I be dimming it down. So it don't be so overbearing when I'm looking at my charts. But let me make it dark for y'all. Premium wick right there. Okay. And then, right, as we go up past that wick there, right, and we keep looking to the left, right, what do we run into? We run into a discount wick right there, but there's a discount wick right there that does more damage. It digs in deeper, right? So we got a discount wick there that dug deeper. You want to look for the wick that does the most damage, right? The most damage. Now, since these wicks are right here in the same area, right, and you're looking for a wick to act as support, if you still got this wick right here marked out from last week, right, there's nothing wrong with just leaving that one marked out and not marking this one. But I like to utilize the PD arrays that are more recent in price first. That's why I'm looking at this one before that one, because I know last week we had marked this one out as a wick that we was using for, support, right? But I like to use the ones that's more recent in price. All right, so that wick right there, 922. I forgot I gotta make them dark. Let me go in there and make these dark on the other one too. And then you notice some of these I'm just showing 3 levels, right? I'm just showing 3 levels on some of them. And some of them, because like I really be concerned with like the quadrants, especially when the low or the high is overlapping with something else. Okay. And then, right? So we got, and we keep, and then we look to the left, right? And when we go past this right here, what do we got? We got a premium wick right there, right? What day is that? The 24th, right? So now we got all of our, right, daily PD arrays, right, that we're looking for support or resistance. Now, I'm not going to keep the implied fair value gaps on there. I'll show how I used it earlier, right? First. So we're going to go back to our intraday time frame. All right. What we on? We was on the 60 earlier, right? We was on a 60. Right. So looking on a 60-minute time frame, right? Looking on our 60-minute time frame when we took off here, right? You see how we came up, right? Right there to the low of the SIBI, right? We came up here to the low of the SIBI, right? Backed off of it, opened up, traded up a little bit above there, right? Closed above the low, opened up, traded down into the low of the BISI, right? Traded up to the high of the implied SIBI, backed up off of it, right? And then was doing the Lord's work inside there, right? So that was the implied fair value gap there, right? And then if we look later in the day, right, you see how late in the day we came back to it, right? Back to the BISI there, traded up off of it, wick down, took out the sell side, traded up off of it, came back down to the SIBI there, right? Came close to it there, right? That's how we were using the implied fair value gap throughout the day, right? So I'm not leaving them on there anymore. Taking those off. Okay, now you say, Tim, there's 42 million lines on your chart. I don't keep them all on there at the same time. All right. The PD arrays never go stale. So as price is moving up, right? And now remember we said we leave our area when we open here, we left our area, right? And we're looking at all of this down here as a balanced price range, not anticipating price to come back down into it, right? So out the gate, right, we're only looking at the first premium wick, which would be, no, I'm in the wrong spot right here. The 24th, I think. No, the 25th. All right. So the 25th. All right. So now, right, this is the first one we're watching. We're not watching the other ones yet because we're pricing as we go up. We're looking to the left, right? And this is our daily time frame that we're looking to act as support, right? Our daily time frame that we're looking to act as support. Now, right? How do you use time frame confluence, Tim? I'm glad you asked that question, little Timmy Rogers. What do we say about these quadrant levels? The algorithm will do what? at these quadrant levels? Who remembers what we said the algorithm does at these quadrant levels?
Consolidate.
No, not consolidate. Very good. Here to learn and share. And Kim, here to learn and share, said PD arrays. Kim said leave breadcrumbs. That is correct. The algorithm is going to leave breadcrumbs at these quadrant levels, right? And this is a daily premium wick, right? So our daily time frame, if we look at a day, right? If we look at a day, what we always do, we do our two, that's I always be doing a 2 time frame thing, right? 2 time frame thing. Okay. So our daily time frame, that's our narrative time frame, right? Okay. Narrative time frame, right? 2 times frame down from the daily on the standard chart for our 1 hour. That would be our structure time frame. Then 2 time frames down, 15 minute, 5 minute. That can be our entry time frame. And if we want to refine it, we can go all the way down to a 1 minute, right? But on our narrative time frame of the daily, we're looking for this to act as support, right? Because the daily time frame is bullish, right? On our structure time frame, right? Can somebody tell me what this PD array is right here? This is a what, right? We got a 3 candle pattern where candle 1 and candle 3 don't share price. Can somebody tell me what that PD array is? What is that PD array? That is a what?
That's a high
Fair value
probability.
That's a fair value gap. Stop trying to get ahead of me, C-Walk. It is a SIBI. It is a SIBI. Now, C-Walk, right? Which SIBI is this in the scope of the algorithm displacing away and taking out liquidity? What SIBI is that? That is the what? The very what?
High probability.
No, the very what?
First one.
The very first SIBI that's created when we come down and take out liquidity in this, when the elephant stepped in the pool. The money is making the market move here, right? So the very first imbalance that was created on this drop down, right? If we create an inversion of that, we are looking for that to be an inversion fair value gap. We're not just looking for it to be an inversion because we closed on the other side of it. We're looking for it to be an inversion for a very specific reason. And in this case, it is the very first one that was created when the algorithm manipulated price. Man, he's cooking. Y'all better let him cook, right? Now notice, when we come back, when we open up price and we start to trade up, right? We open up price and we start to trade up. A chug, 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 a choo, choo, right? As we're going up, okay? When we close this candle right here, if you look, come here. Get up, come here, get back up there. When we close this candle right here, if we look over here, we just created an inversion fair value gap. Where is this inversion fair value gap located at? We have a quadrant here. We have a quadrant there. It's located right on a quadrant level, right? We are, the majority of it is below that quadrant right there. So now what do we anticipate? Price to trade back down into this quadrant to use it as support because we have confluence of a inversion fair value gap where the algorithm left it at a daily quadrant level and price goes up. But not only does price go up from there, when we look here, right, we have a balanced price range because we offered price in both directions here, right? We offer price in both directions there, right? We trade up and we close above consequent encroachment when we offer these both directions, right? And then, right, we open up here and totally disrespect this wick. So now the algorithm is leaving a balanced price range here. And if we get our Fibonacci tool and run it from when we left that balanced price range to the high and look at consequent encroachment, we came back down to a discount. Oh my goodness, this stuff freaking works. You mean to tell me that it came back to a discount of a new dealing range that it established for me to look for opportunity to buy in after leaving a balanced price range, just like he said it would do? Oh my goodness. Oh my goodness. And then remember, gang, do y'all remember when we talked, Deborah, I know you remember because you asked a question about it. You said, Tim, that thing about the balanced price range with the wick and the candle and all of that, and then you could just enter right there, yada yada you. If y'all look right here on this hourly time frame, I was doing that on the 1 minute chart, right? If you look at this hourly time frame, right, we have a wick here, right? Long wick offered both ways, right? We got a candle here that trades up and takes out that high, right? And then the very next candle trades up and instantly disrespects that wick. You can enter in, boop, right there, soon as that candle's open. And you would prefer for it to trade back down and give you a little opportunity to get a deeper entry, but you don't have to wait. You can just enter there and then off to the races. That's the exact same thing right there. It's just a little space in between, right? And for the haters that say, oh, this guy is just talking a whole bunch of hindsight, right? For the haters, I actually shared a screenshot today that I can show you haters without any money attached to it, right? So that you can see I walk it like I talk it. I walk it like I talk it, right? What do we have here? Come here, right? Give me my thing there, right? If you see here, right, this is my, that's my entry right over here, right? Why am I entering like that? Because, right, we have, right, we offered price here, right, both directions, right, got this long wick over here, right, offer price both directions, offer price both directions, right, trade down there, immediately overlapping that right there. As soon as that candle closes, entering in right there to go short, right? Entering in to go short right there, all right? It trades back up into the volume imbalance. Since I got the retracement, added another one at the inefficiency right there because I got the retracement back up. If I didn't get the retracement back up, I'm just short one contract and I'm taking it down to a certain place I want to go to. But since I got the retracement back up, added another contract at the volume imbalance right there. Now that I got 2 on, right? Now I got the ability to play around with my exits, right? I got the ability to play around with my exits. So as price comes down, right, and I come here around consequent encroachment of this right there, I'm taking one off, right? Why? Just to pay myself a little something, just in case price wants to try to hit me with a 52 fake out. Paid myself a little something there, right? Then I could let my other one go to my 15-point TP, right? Because I'm looking for 15 to 20 points. I could let my other one go to my 15-point TP, right? Because if I didn't scale the other one in, I was just looking for that one to get my 15-point TP. Why? Because it came in line with this low-hanging fruit right here. Okay. Same thing that I be preaching, right? There. You see there? Entered in here. As soon as this candle closed, market in there, it gave me, I'm down a little bit because I'm marketed in. So I market, it gave me 1 tick down. As I trade back up, market in again when I'm hitting the volume imbalance right there. In, come out, right? When I drop down here around consequent encroachment, I mark it out, right? You see right there, 33.25. The consequent encroachment was like 33 even, right? Right? 33.25. Mark it out right there. Come down there, target hit right there. Where's that target? Right down there at that low right there. All right. Same thing. All right. Same thing. Nothing different. I ain't doing nothing different than what I'm talking about when I'm looking at price, right? This stuff really works. Who knew? Who knew that this stuff really worked? I did. I knew it really worked. Okay, so now we've established the fact that you can let price come back to a discount and buy off of anticipated areas of support based off that higher time frame, right? And we got ways, and we see how we can do it, right? Off of our different time frames. And if we look here, remember what we said, right? This right here was our inversion fair value gap. Now looking at our entry time frame, when we said daily was the narrative, hourly was the structure, 5-minute was the entry, right? Now that our hourly, right, we got a close above on the hourly, creating an inversion fair value gap, right? And if we look here on the 5-minute, what do we do here? We consolidated there. We expanded up. We came back down to a discount, right? We expanded up again. And as we expanded up this time, right? If we get our Fibonacci tool, right? That's our low. That's our high. We come back down to a discount. What is this right here resting in a discount? Oh, that would be a SIBI right there. What is this right here? This is a bullish order block right there. Where is all of that resting? Right there inside our high probability inversion fair value gap on the hourly time frame. Where is all that rest? Look at the bodies respecting that upper quadrant of the daily wick, right? See that upper quadrant right there, resting on that day. We're wicking over, but we're resting right there on that daily upper quadrant. Where is this bullish fair value gap? On the quadrant. Where's the majority of it? Below that quadrant right there. I know that fair value gap is the wrong color, so let me fix that for y'all, right? But you see how that's resting on that quadrant right there, resting on that quadrant. And speaking of quadrants, right? Oh yeah, all this stuff is fractal, man. All this stuff is fractal, right? All of this stuff is fractal, man. If I get me a Fibonacci tool, right? Come here, go to quads here, and I'm gonna stretch the other way. Let's stretch the other way because it's the upper. Boop. Put that right there like that. And then go back down to that 5-minute time frame. Right. And we come over there like this right here. And we stretch that up right there. Right. Where's that order block right there on that upper quadrant of that an inversion fair value gap? What does price come down to? That upper quadrant of that inversion fair value gap. What does price respect? That upper quadrant of that daily wick, right? What does price come down to? That upper quadrant of that fair value gap. What does price trade below right there? A lower time frame swing low, taking out sell side liquidity, manipulation, right? What does price respect? That upper quadrant of that bullish fair value gap, right? Then we open up here, then we drop down to consequent encroachment of that bullish fair value gap right there, right? Drop down to consequent encroachment of the bullish fair value gap, and we respect the upper quadrant of the wick, right? And then after we get that manipulation of sell side at that quadrant level of the the inversion fair value gap, right? Price displaces up, right? We take off, trade back down to that upper quadrant of that daily wick, right? Price displaces away again, right? And then we come back down here, trading down into the order block right there, respecting, right? This is our propulsion block. This is our order block right there. Come down, respecting, right? Mean threshold of that order block, and price moves away. This stuff is fractal. All of it is fractal. The algorithm is going to leave breadcrumbs at these quadrant levels, right? It's not a mistake. You just have to know where to look. You just have to know where to look, right? But Tim, you showed us a short you was taking. What did I say? If you understand order flow and price delivery, you can trade against the grain, but you want to take base hits. What did I take? Did I stay in a trade long? No. Was I trying to go for a whole lot? No. Did price go further than I traded to? Yes, it did. Right. I got out here. Price came all the way down here. But after price came down there, what did price do? Let's see. That's around 315 or so on a 1 minute candle. Let's go look at 315 or so on a 1 minute candle. All right. So we go to 1 minute. Somebody got their hand up. Speak. You're inside the
sorry.
What's up? What you got?
I just have a question. On the 315 candle right here that you're looking at, price rejects from that fair value gap that you drew. So can you also use this as an indicator that price will go the other direction? Because I forgot. I think it was an institutional
order flow entry drill. That's what you got right there.
Is that what it is?
Yeah, that's your reason to buy right there. Right. Okay. That's your reason to buy. Why? Why is that your reason to buy? Because, right. And you see at this time here, right, we created this inversion fair value gap. Yes, we used it over here. But Mike, how does Michael teach it? You create it, you trade away from it, and you come back to it, right? We created the inversion fair value gap. We traded away from it, and then we came back to it, right? This is a 60-minute inversion fair value gap. If we go to our 60-minute time frame, right? We go to our 60-minute time frame, okay? When I was shorting, right? When I was shorting inside here, because remember we said it was around 315, right? I was shorted inside here with the idea that price is reaching back down into these PD arrays because we created it, we traded away, and we're coming back. But since we have a midnight price right here and the higher time frame is bullish, right? We could very well trade down below this midnight price and continue back up. So I'm not trying to force my bearish narrative why price is moving bullishly. I'm getting in, getting out, right? Happy. I've made my money, right? I'm happy I've made my money. I'm getting out over here somewhere, but price comes all the way down. And if you notice, it stopped, right? When you're looking at the picture without all the lipstick, right? It looks as if price just stopped somewhere. Why did it stop here? It just stopped for no reason and started going back up. It didn't stop for no reason. It stopped for a very good reason, right? It stopped because it came to this inversion fair value gap. And not only did it come to the inversion fair value gap, oh my goodness, look at this right here. Right? Look at this right here. All right. We came back down here. Remember we said, remember we said that this right here was when we left the balanced price range and we took off, right? Remember, because that's why we marked this out. That right there is the first imbalance that we created when we took off, right? We traded back down, used it as a discount PDub right here off of that first touch, right? Now, this is a 15-minute imbalance right there, right? We traded down to this hourly on this first touch of this hourly inversion fair value gap. So now for this 15-minute, we traded away and we came back to it. So we used it right there, right? Traded away, came back to it. Now on the hourly time frame, right? We came up and created it. Once we created it, we traded away from it. And then on the hourly time frame, we came back to it. And then what do we have in confluence with that? We have a lower time frame bullish PD array in line with this hourly. And if you look, institutional order flow entry drill inside of the hourly inversion fair value gap, and then we rally off of it. Boop, just like that. All right. Does that mean it's going to keep blasting off? No, it doesn't. No, if it doesn't, I don't care. But that right there just shows you this stuff really works, man. This stuff, and I was coming here to show that's why it bounced. That's why I'm not trying to force price to keep falling. I'm not trying to say, hey, that's the top. I'm not trying to force it to keep falling. All right. I'm just taking my short. I'm taking my, you know what I'm saying? Taking my little low hanging fruit, right? The opportunity to scale in just make my low hanging fruit be a little bit more profitable than before, but I'm not being greedy and trying to force it all the way. Yeah, I could have tried to go there. I could have tried to go there. I could have whatever, but ain't no guarantee that it's going to come down here because we're in bullish order flow on the higher time frame. So I'm just taking my low hanging fruit. And then when it comes down here to an area where it's supposed to be supported, it gets supported and it go back up. Right. Yes, that's manipulation. All right. Prices always manipulating liquidity to go in another direction. Now, you have to understand where are you in the sense of price delivery, right? It's like the last bus stop before we take off. Holy sugar, honey, iced tea, right? So you say, is it manipulation? Yes, but you have to identify. You want to be able to identify the manipulation, right? You want to be able to identify the manipulation. And if you understand, if you're in a buy or sell program, the manipulation is easier to identify than if you don't know if you're in a buy or sell program, right? If you don't know if you're in a buy or sell program, right? And then, when we come back, when we look here, this was the
22nd, right? You can see how I was watching the 22nd also when I was trading last night, and then the 24th. The 24th was the highest. Yeah, the 24th was the highest one. That was the highest one above, right? So, and we talked about this too, right? The buy side liquidity resting there, right? And the buy side liquidity resting there. We talked about those liquidity pools, right? Being internal liquidity for this sale program, right? So now we're looking at this right here. Remember, we was looking at all of this stuff, these different wicks, that wick, that wick, that wick. We're looking for all these wicks to if they're going to act as support or resistance, right? So going up toward the buy side, the internal buy side, that buy side and that buy side, we want them to act as support, right? Now that we've taken the buy side, okay, now what are we doing? Right? Notice now. This is on a 15-minute time frame right here, just looking at the 15-minute. All right. So as we're going up, right, come to the low of it, right? Use it as support. Go from the low to the lower quadrant, right? Use it as support. Go from the lower quadrant to consequent encroachment. Use that support. Go to the upper quadrant, right? Drop back down to consequent encroachment, right? Go back up to the upper quadrant, drop back down and manipulate out sell side, coming down to the lower quadrant and use it as support, right? What's at that lower quadrant? An order block, right? Use it as support. Come back up here to the upper quadrant, take out the high, right? Drop back down to the lower quadrant, take out the low. Then we blast off and take out the high, right? What is that? That's a wig snatcher, right? On the 15-minute chart, that's a wig snatcher. Now on this wig snatcher, we go up and we take out the buy side liquidity because this right here was up here at our buy side liquidity, highest buy side liquidity that we was watching as our internal liquidity. Okay. Once we take out our buy side liquidity, right? We come up, blast off our buy side liquidity. What do we create right here? A BISI as we manipulate out the buy side, right? Created a BISI, manipulating out the buy side, then immediately come back and create an inversion fair value gap, right? So now we got an efficiently delivered area. We got our favorite little V shape up there. What's up there? Trap traders are trapped in that V shape. What does price do? Price uses this balanced price range as resistance, right? And what else does it use? That lower quadrant with that balanced price range, use it as resistance, right? For the remainder of the day. Oh my goodness. Oh my goodness. Somebody better stop. What you got, Abdul?
Yeah, just another question. So on the 1 hour time frame at at 9 o'clock, there is a IFVG. If you go on the 1 hour, that's an
You said 9 o'clock?
yeah, 9 o'clock candle. There should be.
See here. 9 o'clock. And yes, right here. That right there.
Yes. So I marked this out on my charts as a inverse fair value gap. So what can we be expecting price to do? Say if it returns here, would it be similar to the other fair value gap that you drew earlier, where an institutional order flow thing happened, or no?
Nah, it's all about narrative. Right. It's all about narrative. What is price doing? Right. What is price doing in relations to that? Right. We're not just looking for it to be an inversion fair value gap because we want it to be. Now we have come up and we've taken out internal liquidity inside of this sell program, right? So now the higher time frame is bullish, right? So trading, because if you look here, right, we're on the right side of a market maker buy model. We complete that market maker buy model by making new all-time highs, right? So you don't want to go in trying to fade not completing this, you know what I'm saying? You don't want to fade completing this market maker buy model at this inversion fair value gap, right? Because it's like we haven't completed this and the higher time frame is bullish. Okay, it could very well come up and use it as resistance, right? But you want to allow price to show you that first, because the higher time frame is bullish and you're looking at a bearish narrative. You see what I'm saying? You don't want to just go in. Now, if we were bearish, if the higher time frame was bearish, and then you had a inversion fair value gap after sweeping out buy side, then you could trust it more to go in and act as resistance. But you're fading the higher time frame bias in this case right here, and you never want to just, especially when you're up here about to complete a market maker model. You see what I'm saying? Because at this point over here, right, now that we've come up and poked above that high right there and got this deeper retracement, because we took out a important high, right? We took out an intermediate term high. So if you take out an intermediate term high, you can anticipate a deeper retracement, right? So now that we got that deeper retracement, now you're anticipating some type of lower resistance liquidity run into the completion of the market maker buy model, right? That's what you're looking for based off of this here. But like I say, it very well can use that as resistance, but you want the algorithm to show you that first, because you're trading against the higher time frame narrative and bias. So you don't want to be the first guy at the party, you know, trying to be the big shot, the tap on your chest and say, I'll call it the high on the NQ. You understand what I'm saying?
Oh, yes, I do. Thank you.
Yeah. So you're seeing the PD arrays there, but seeing a PD array isn't all you need to do. That's no different than trading chart patterns, right? You want to understand the narrative and why that PD array is there. Why should the algorithm use that as an inversion, right? Why should it use that as support? Why should it use that as resistance? You know what I'm saying? That's why I say when you understand, when you know the direction, you can identify the manipulation more easily, right? You can identify the manipulation more easily when you know the direction, when you know which way price is going. All right. I think I done said enough. Anybody got any more questions? Did y'all get anything out of this? Are you not entertained?
Yeah, Tim, that was good. That was good, Tim. I'm gonna have to watch it again.
Nope,
Yes.
I ain't saving it. I'm deleting it. You should have took notes. I know Rhonda took notes. Rhonda, did you take notes, Rhonda? Where Rhonda at? Is Rhonda in here? If Rhonda's still in here, I know she took notes. If Rhonda took notes, I am going to delete this video. Rhonda, you still in here? Watch Rhonda pretend like she's not in here now. Watch she pretend like she's not in here now. What's up, E-Rock? Man, E-Rock, I ain't seen you forever. E-Rock, come over in the Zoom and say what's up to us, E-Rock. Look here. It's going to be on. If E-Rock don't come in here and say what's up to us, I'm deleting the stream. E-Rock, come in here, E-Rock. Click on the link at the top. Come in the Zoom. I don't care if you what's that, playing hooky from the gym again. I don't care if you're playing hooky from the gym. Come and click on the link and come in and say what's up. If you don't say, E-Rock got some new hair. Is that new hair? E-Rock, you better come through with that new hair, E-Rock. What's going on? E-Rock got the new hair. What's up, E-Rock?
Hello, everyone.
Y'all better be glad she came. My feelings ain't hurt now. She came and said hello. So I'm not going to delete the stream. E-Rock coming through with a new, E-Rock got the new hair, got the red lipstick popping.
It's just a different profile.
You better cut. You better make the kids eat cake, E-Rock. E-Rock, look at her, light-skinned Deborah. E-Rock said, light-skinned Deborah ain't gonna be the only one with the hair laid, baby. Oh, man. I love it. I love it. Good to see you, E-Rock. Even though you playing hooky from the gym. Good to see you.
I know. That's why I didn't want to speak, because I was ashamed that I haven't been to the gym. You knew if I'm in here, that means I'm not at the gym. So
I played hooky from the gym on Friday. Me and my son went and ate hibachi. We played hooky from the gym and ate hibachi. I got real full too. Had enough left over for a full dinner. Hey man, that's all I got. If y'all ain't got nothing, we gonna call it right there. It's tomorrow is Tuesday. No take breeding tomorrow. Wednesday is our monthly lecture for the Diamond members. I got to figure out something to talk about, man. We've been cooking on the live streams. I don't even know what I can talk about for a monthly lecture. Diamond members, if y'all got anything in particular that you want me to cover in more detail, and it's something that we've been talking about recently, like put it in the chat. Be like, hey, Tim, talk about this Wednesday night, right? So, because I've been talking about so much, I don't know what I could talk about for the monthly lecture. It's just going to be like a repeat of something old, right? So if you got something particular you want to hear, let me know. That way I could talk about something that I know somebody want to hear something about. If not, it's just going to be whatever I pick. If this was your first time tuning in to Tim's Tidbits, I hope you got something out of it. If it wasn't your first time tuning in, I still hope you got something out of it. If you ain't getting nothing out of it, hey, man, I'll try my best again next time. I ain't going to do nothing but say the same stuff all over again. If you can't get it that time, I'd say it in another way, and hopefully it finally click for you. Yeah, man. You're welcome, Steve, and everybody else. Hey, man, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Lee Rogers Sr. What say? No, I'm at home. Don't be trying to come up now. She was trying to hide. AKA on your gun day. That's just big spot of you, though. Yo, y'all be safe out in these strange streets, man. I'm gone.